The Laundry is proudly produced by Strise, the AML automation cloud.
Before we start, can I just confirm that you are not a deepfake Marit? Because that would be the most ironic end to this podcast.
Actually, I've been thinking about this. Man, I've done so many of these podcasts now. We have so many videos online and so much of my voice out there. So at this point, there must be so easy to create a deepfake version of me for anyone.
Your money make a world go round.
Welcome to The Laundry, the podcast connecting AML, compliance, and financial crime to the real world. There's no such thing as a slow year in financial crime. Stories of scandals, crimes, fines, and regulations just keep on coming. But even with that in mind, 2024 feels like a standout year, with events that have had a huge impact on our industry. So, what should compliance professionals focus on? How do we separate what's truly important from what's just entertaining? I'm your host, Marit, CEO of Strise, and in this final episode of the year, we are asking, what were the financial crimes that really mattered in 2024? We'll be discussing, is AMLA getting to the heart of the issues, or is this just more regulation? Will the UK stamp out APP fraud, or does that require fining Musk and Zuckerberg too? And if you're on a call with a deepfake version of your chief financial officer, would you have spotted the signs before sending across millions? And to dive into this topic, I'm here with Jesal Punjani, Managing Director at Plenitude Consulting, and Neil Donovan, Partner at Ashurst. Welcome to The Laundry to both of you.
Thank you
Hi,
very
Marit.
much.
Hi.
Neil, welcome back. You've been on the show before, but can you quickly remind our listeners about you, your background, and Ashurst?
Thanks very much, Marit. It's brilliant to be back on The Laundry. Thanks for the invitation. I'm a partner in the corporate crime and investigations team at the law firm Ashurst in London. I represent companies and individuals in criminal and regulatory investigations and advise clients on the full spectrum of financial crime risks.
And Jess, you are a first time on The Laundry. It might not be the last. Can you tell our listeners about you, your background, and Plenitude?
I certainly can. Thank you, Marit. It's lovely to see you again. And thanks for inviting me to The Laundry. Neil, pleasure to meet you too. So I'm Jesal Punjani, as you said. I'm the Managing Director at Plenitude Consulting. So I'm co-head of our advisory and transformation practice. I've been at Plenitude for over a decade now, and we're a specialist financial crime and fraud consulting firm. We're known for working with some of the largest UK multinational financial services firms who trust us to deliver complex financial crime programs, provide advisory services on regulations, enhancing controlled environments, and also technology advisory. I've had the pleasure of working with lots of different clients over my 20-year consulting history, and Plenitude's a great place to do that.
I do gotta do a disclosure that I do know Plenitude really well, and I just also love working with you guys. So really glad to have you on the show. And let's dive into the discussion about what financial crime stories matter this year. And let's start by looking at the beginning of the year, because in February, it was announced that EU's new anti-money laundering authority will be based in Frankfurt. And AMLA is set to play a key role in fighting illicit financial activities.
Ladies and gentlemen, today marks truly a significant milestone in the fight against money laundering and terrorist financing within the European Union. The Council and the European Parliament have reached an agreement on the seat of the future European Anti-Money Laundering Authority, known as AMLA. Following an in-depth assessment of the 9 member states' applications and after joint public hearings on the 30th of January, the co-legislators held a vote today. We came to an agreement and the city of Frankfurt has been chosen to host the AMLA.
Neil, do you want to just give a quick background on what AMLA actually is before we go into what impact it will have?
Sure. This is undoubtedly a really significant step, Marit. AMLA is the first pan-European wide regulator of AML and counter-terrorist financing. So it's the first time we've had a European-wide regulator in this space. And AMLA is going to have a really broad remit, so partly facilitating cooperation and sharing of information between member states. But AMLA is also going to have supervisory powers over a select group of larger obliged entities, larger firms that are considered particular high risk for money laundering. And so that's really significant, because for those institutions, it's another supervisor, another regulator to be dealing with, and AMLA will have powers to take enforcement action against those firms for breaches of the rules. So it is really significant, because up until now, we've had this kind of patchwork of regulators. It's been very much based at member state level. And I think this is very much a step at looking to harmonise money laundering supervision and enforcement across the bloc.
And Jess, do you think that this unified approach will improve and have an impact on what happened before across the EU?
Yeah, I mean, I'd hope so. I think the challenge, as Neil pointed out, is that sort of patchwork quilt of national regulators. And, that leads to inconsistencies, or can lead to inconsistencies. And I guess AMLA is trying to fill that gap and through harmonisation and standardisation. So I think it will definitely have merits, because it should address some of that fragmented oversight and introduce some of that kind of centralisation, stability, standardisation, which I think is really, really key, particularly in the EU, where criminals don't have to respect organisational silos or jurisdictional boundaries. And so they'll always look for these weak links. And I think that's where AMLA can really add value here, by addressing those weak links, or identifying those weak links and strengthening controls in slightly weaker areas, to just try and make it more difficult for criminals to operate.
That's a really good point that Jess makes. I mean, criminals don't operate within geographic boundaries, right? So money laundering is by its very nature a cross-border risk. And so I think having a regulator that operates across borders and isn't siloed to individual member states is a positive step.
So it was a big news that the story broke that they had decided on the new location for AMLA. People were waiting for that for a long time. Does location matter in making this new authority successful? What's your thoughts?
I think it's incredibly important, right? With the ambitions that they have, there's a lot they're going to need to do. And I think to do that, you need really good talent. And so I think from a purely talent-based perspective, location is really important, because you're going to need to have the right people that want to work in AMLA and achieve all the ambitions that they want to achieve. I think it's naive not to think that there's a big political aspect to this as well, right? They need to have the right level of political influence. They need the proximity to other European institutions. So I think Frankfurt's a good choice. Questionable as to whether Germany is the right place, given their national regulator has come under some criticism. But I think given the overall objective and what they're trying to do is harmonise that system, to some extent location shouldn't matter. But I guess the reality is those points around, I guess, the talent, political influence and infrastructural challenges means that you have to be located in somewhere like Frankfurt that is an attractive place to go to. And I think that will help AMLA to achieve its very, very ambitious goals and aims.
Yeah, I'd agree. I'd agree with Jess. I think, look, there are a number of underperforming national supervisors across the EU. So I think one of the challenges.
Do you want to name those, or should we just save that for a different episode topic?
Yeah, absolutely. No naming and shaming here. But I think that's one of the challenges initially is to really I think a lot of AMLA's work will be focusing on those member states where there's been a poor track record really in AML supervision.
Do you guys think they have the right amount of funding and industry backing to truly make a difference? Because even if you place AMLA in a place with lots of talent, if you don't have the funding to pay the top talent, it's not going to work. And if the industry doesn't believe in it, it's going to be really, really hard. What's your take on that?
I think the number is 92 million, 70% of which is funded by financial services. I think it's a massive stretch. To try and achieve what they want to do with that budget is going to be a challenge. You look at the FCA budget, it's over 750 million, right? It's in a different league. But I think we do need to remember that it will be working in conjunction with national regulators who have pretty decent budgets as well. So you have to assume that this is going to be the start of an incremental journey and that there will be more funding required to really achieve what it needs to. This is a starting point. I think going in too high, given the nature of where the funding's coming from, I think would have been a challenge. You've got, financial institutions are already having to invest a lot in compliance, work with their national regulators, pay the national regulators, and then also funding a EU-wide regulator is always going to be a difficult pill to swallow. So I think this is the start of the journey. I think it's definitely not enough. I think they need to be really, really strategic and tactical about how they use that initial funding, because they are going to need to demonstrate some good outcomes very quickly, very early on, I think, to establish credibility and buy-in from the many, many stakeholders they have.
If you were in AMLA now and you needed to show results or outcomes quite quickly, what would be the first thing you'd introduce if you were the head of AMLA right now?
Well, the first thing is a difficult thing because whenever you're setting something up, you've got to start with the foundational element. So let me jump a little bit ahead and tell you what my first ambition would be, which would be a very, very tech-focused approach to managing all of the member nations and the private firms. I think having good technology means that you can do more with less in theory. And I think it's an easy way to start to get gains. I think the key point here is AMLA should have access to lots more information than the independent national regulators will have. And that's where the value is going to be. It's in that bigger picture thing. It's the thing that they can do that the other national regulators can't do. So I think they should focus on that, really bringing together data and information and looking at how they can target some of the higher risk areas using that data, analytics, AI, all that good stuff, right? And I'm conscious I'm saying this, 92 million isn't really going to go a huge way in achieving that, but I think that's probably the way they're probably going to get the biggest bang for their buck on this and add value to the existing system because it's something they can do that the others can't. But it's going to need a lot of support and coordination from national regulators, from the financial services industry to provide that data. That's going to be the big challenge.
And Neil, same question for you. If you were the head of AMLA, what would be your first ambition, given that you would need to show outcomes quite fast?
Similar to Jez, I think the focus has to be on addressing the kind of information delta at the present that the authorities have. And the information is out there, but bringing it together in a harmonized way so that people are looking at information on financial crime, risk and suspicious activity holistically, and then it will be much more easier to join the dots and to identify the criminal activity and stop that. I think that's quite a key first step because if you don't have the information, if you're not mining the information in the right way and doing the proper analysis on it, then ultimately you're not going to be able to progress in terms of tackling the underlying criminal activity. One point just in terms of resourcing and where AMLA, the starting point here for AMLA is that the European Banking Authority has since 2020 been leading on AML supervision within the bloc. So there is some existing work, I think, that's already been done. Now, curiously, to our point earlier, that's based in Paris and not Frankfurt. So there's not a direct kind of transition from the EBA team to AMLA. But I do think some of the kind of initial work is there and also in respect of information sharing. So they're not going from a standing start.
Yeah, I agree. That's a really good point.
I think we could talk about AMLA all day long, but let's. There are other stories that mattered too this year, so let's move on. And if you are in the financial crime space, I think you must have been living under a rock if you haven't heard about the APP fraud this year.
The amount of compensation which banks will pay to fraud victims is being slashed. Instead of covering up to £415,000 of losses, they will now only pay up to £85,000. Campaigners representing bank customers say the move is an outrageous watering down of scam protections.
The text that cost Rita Tor £436,000. It looked like it was from her card provider querying a transfer, but it was from criminals. As they emptied all her accounts, the fraudster said if she mentioned this to anyone, she'd jeopardize an official investigation.
I mean, it's been all over the news, LinkedIn. And the story is that UK banks now must refund fraud up to £85,000. So, Jesal, how do you think it's going so far? It hasn't been that long since it was introduced. What's the word on the street? What are people thinking? What are people doing?
So I think from a consumer perspective, it's a huge step in the right direction, right? It's a real kind of signaling policy from the PSR. And I think I'm trying to think how banks are embracing it, right? I think they are embracing it. I think, reluctantly to some extent, but I think it's the sentiment behind the regulation that I think is really, really important. That joint accountability between two parties is really important to just crystallize those risks and drive the right behaviors in terms of improving controls. I think that's the objective here, right? So I think from that perspective, it's a really good message to the industry, to the economy, to consumers. Of course, there are teething challenges. There always are going to be with new regulations, particularly in terms of implementation. There's delays on refunds and disputes between banks, etc. That will all work its way out of the system, I think, over time. But I think so far it's going as well as it can. There's still going to be a lot of work to do as institutions look to optimize the way in which they manage this. But as I said, I think from a consumer perspective, it just gives a lot more confidence in the ability to spend money. Now, I say that, and there is a huge consumer responsibility here as well, that we've got to be really careful we're not devolving the individual of responsibility to check what they're doing. But as I said, I think this is really about signaling the direction that we want to go in.
What are your thoughts, Neil? What are people saying about APP fraud in the conversations you're having?
I agree with Jess. From a consumer perspective, it's definitely a positive move. I mean, although a number of financial institutions were reimbursing customers for scams prior to the new rules coming into force, it is now an additional burden on banks, on financial institutions. I assume kind of significant overhaul of procedures and processes, which I'm sure your firm are advising on, has had to be undertaken. A lot of work's gone into this. There are some really tricky areas of it, actually, Marit. So take, for example, like the kind of determination that has to be made as to whether a case is an actual legitimate APP fraud, or is it just a bad bargain and a bad commercial bargain that a consumer's entered into. And where firms draw the line on that decision is going to be absolutely key, because they don't want to cause further harm and detriment to a consumer by denying them the APP reimbursement where it is a legitimate case.
Yeah, it's a really good point. It becomes so complex in trying to understand where that threshold is.
Do you guys see that this new legislation actually impacts the amount of APP fraud we see happening?
Well, I suppose time will tell with that. I think we'll have to wait until it's been in place for a period of time. But I mean, I don't know how material a risk this is at present, but is that the scheme itself could be open to fraudulent abuse by bad actors acting in concert to defraud the APP scheme run by banks. So,
like a fraudster, fraudsters setting each other up for fraud to both get the initial amount and the refund. So they're like ending up with twice the money.
Exactly. So, and it would be remiss of us not to kind of acknowledge that as a risk. We know how sophisticated fraudsters can be. And so I think how banks address that is going to be a challenge.
Yeah, that sort of meta level fraud is an interesting one. And I think it's just indicative of the industry from a fraud perspective and financial crime in general. The criminals are so adaptable, far more adaptable than institutions are, right? They don't have to play by the same rules, and they don't have governance boundaries, all that kind of stuff. And I think so if we're talking about whether it's likely to reduce APP fraud, I think there will be a short-term decline. I think there'll be a bit of a bolt. There may be some challenges in terms of fraudsters working their way around the problem, but they will work their way around the problem. I think with new technologies coming through, which we'll talk about later, I think it's inevitable that fraud will evolve. I think on the flip side, to be a bit more positive, I talked about it before, this is quite a clever piece of regulation, right? It's almost designed to help. It's a race to the, maybe not quite the top, but somewhere closer to the top, right? Because it really gets institutions having to think about their controls. And I think the side effect of that, or the sort of halo effect of that, will be strengthening those fraud controls, having more focus on that, will probably result in some level of decrease in APP fraud. But the cynic in me says it will only last as long as the criminals just figure out a different way. And we'll have to constantly evolve and adapt to that challenge.
Yeah, I totally agree. There's always something new to exploit by the criminals. So it's always just like, if you close one gap, then there's another one that appears, etc.
I think something that will be interesting as well is how other countries view this scheme. And they'll definitely be looking at how successful this is, particularly other countries around Europe. And I'm not sure if you or Jess have heard from clients in other countries about what they think about this, because this is the first country to take this step. Yeah,
it's so important. I think, there are other countries, I think Australia, Sweden, Singapore, looking at it and evaluating what we're doing. I think, we are the guinea pig. They have the benefit of waiting to see how this lands, looking at what we did well, looking at what we didn't do so well, and adapting to that. But going back to the point around fraudsters and their ability to adapt, if this does work really, really well in the UK, the obvious next step is, well, we'll start doing more cross-border fraud, where it becomes more difficult. And to your point, Neil, right, that's where this becomes really, really important for other regulators, other nations to think about adopting similar rules, because fraudsters will just move. And look, good for the UK economy, but this is wider than just the UK. We need to solve the problem of fraud, and that needs to be done at a multi-jurisdictional level.
That will definitely be something interesting to keep an eye out for in the new year, how other countries are looking to the UK on this piece of legislation. But final question regarding the APP story is, like, we can't talk about it without talking about the social media. So should we just start having Elon Musk and Mark Zuckerberg also collaborate with banks and having the social media platforms also refund fraud victims? Is that the next step here? What do you guys think?
This goes back to the old age problem of platform. What is a platform, right? And I think that's always going to be the challenge. We see it in respect of online harms and all that kind of stuff, and the arguments that some of the big tech companies have. I think you had a really good statistic. I think it's something like 2/3 of all online shopping scams start on Facebook and Instagram, right? So they clearly have a moral obligation, if nothing else, ethical obligation, to make sure that those adverts are being dealt with very, very quickly. They have clearly incredibly good algorithm capability. It can't be beyond their wit to come up with something that helps to address that. I think the challenge here is obviously where their revenue comes from. There's a conflict of interest there in terms of they get revenue from these scammed ads. That's going to take, again, time to work through the system. It's going to take a lot of legal action through potentially other routes and means before we start getting a decent level of engagement. I think the Online Safety Act, in theory, gets us some way to that, but there's still a huge amount that needs to be done, I think, on that front. And look, I think this has to boil down to, it's got to be that kind of moral, ethical standpoint. They have the capability to do this if they want, and they need to join this party and work with institutions to help resolve this challenge. What
do you think, Neil? Should Mark and Elon join the party?
Well, they can certainly afford it. So I think that, I completely agree with Jess. I think it's incredibly unfair, actually, that the burden lies entirely with the banks here, where the fraud is being perpetrated to a large extent. The stats speak for themselves through the social media platforms. So I agree, both morally, as Jess says, but I think legally as well. There's definitely culpability on the platforms there in terms of allowing these frauds to happen. So I think it's only fair that they should.
I agree. I almost fell for one of those shopping scams on Instagram the other day, and I was like, wow, this has gotten good with AI, because there was some advert about a female founder, which I can obviously relate to, that she had started this business. I think the merchandise was jewelry. I've started this business, used my life savings, it's just haven't been able to successfully run this business. And I was like, now I'm doing the closure sale. And I was like, oh man, I should support that poor female founder. I was like, oh man, wait a minute, take a step back here. This is not true. And I just see in the comments that people are like, no, this is fake. And I'm like, wow, AI and the algorithms are so good. Just the right content to me at the right time. It's yeah. So I also agree that Elon and Mark should join the party.
I think what you've described is probably the most important point, right? Education is the best defense. And I think the more we are talking about these scams, I think there's been lots of stuff on romance scams, there's been documentaries, all that kind of stuff. I think, fake ads, all that kind of stuff. It is the best defense we're going to have against this. And I think people need to educate themselves around what looks like a scam. I think we know this subconsciously, but it's always that too good to be true thing. And I think also for the individuals, they need to report these ads as well. I think there's a tendency to, that kind of shame, embarrassment, whatever it is, but they do need to start reporting these to the platforms. Because if we do get to a state where, the likes of Facebook and Instagram and others are brought into this party, there's going to need to be evidence that shows that they didn't do what they should have done. And I think reporting these scams is one way to say, we highlighted it, but you didn't do anything about it. And that's where we're going to start to get action. But yeah, education is so key on this. And we're all empowered to do that.
But I also have some negative feelings around it, because I don't want us to end up in a society where you're like, question everything, don't trust anything. The very fabric of our Western democracies is trust, and I just don't want that to be torn down by fraudsters. But I do agree, we need education, but we also need to let people know that, remember, you can't trust things as well. So I guess it's just about developing that sixth sense. Okay, we'll be right back to talk about another type of scam, a wild deepfake scam, as well as what our panel thinks are the stories that mattered this year. Be right back. Strise turns AML from a costly burden into an automated winner. But don't just take my word for it. Let's hear what Norway's own BN Bank has to say.
BN Bank specializes on mortgages and the real estate industry, a high-risk industry when it comes to money laundering. Before, we wasted 10 to 15% of our resources investigating false flaggings from legacy systems. Obviously, something had to change. We decided to implement Strise because we saw that there were flaws in the legacy system that we have. The money launderers easily identify which banks they are able to do their transactions in and where they're not subject to enhanced customer due diligence. And without the help of Strise, we would have ended up harboring a lot of new clients and celebrating the new clients whilst increasing the risk in the bank. With Strise, you are able to turn on automation in onboarding of low-risk clients, but more important than that, you can use Strise to classify clients better and with that reduce unnecessary flagging. False flagging is when you get the transaction flagged that after investigation is not linked to money laundering. And when we get the reduction in false flagging by 30%, like Strise has enabled, we are able to reallocate 10 to 15% of our combined resources into further investigation of high-risk clients.
Explore the AML Automation Cloud. Visit strise.ai for more information. Welcome back. The final story that we're discussing comes from CNN in February. And that was a finance worker pays out $25 million after a video call with deepfake chief financial officer.
Just last month, a finance worker in Hong Kong got scammed into paying a whopping $25 million to scammers who used deepfake technology to successfully pose as a company executive during an entire Zoom meeting. During a Zoom call with the CFO and other colleagues they knew, the worker ended up getting persuaded that no, I'm talking to a real person. This is legit, right? And so let's move forward with this deal. Here's what the Hong Kong police suspects happened. Scammers found publicly available video and audio of the impersonation targets via YouTube and then used deepfake technology to emulate their voices to lure the victim to follow their instructions.
That is obviously a wild story and a wild amount to pay out in one single fraud. You need to sell a lot of fake jewelry in order to get to $25 million. 2024, was that the year where AI scams moved from the subject of sci-fi novels to an actual reality? What's your take on this?
Before we start, can I just confirm that you are not a deepfake Marit? Because that would be the most ironic end to this podcast.
That would have been ironic. But actually, I've been thinking about this. Man, I've done so many of these podcasts now. We have so many videos online and so much of my voice out there. So at this point, there must be so easy to create a deepfake version of me for anyone. So I'm actually thinking about it ooh, how will the future look?
That's what the AI would say in response to my question, so I don't trust it now.
Yeah, we're none the wiser.
Yeah, exactly. Do you remember where we first met?
In the Plenitude offices at the Canary Wharf.
There we go. That's verification enough for me.
And I met Neil the first time at the Atomico offices in Fitzrovia in London.
We met in person just to address the AI deepfake risks. So, but look, this story is kind of equally fascinating and terrifying. You shared some interesting stats, Marit, just around the volume of deepfake incidents in the financial sector, which have increased 780% over the past year. But I think the concern is that as the AI continues to evolve into a more sophisticated tool and just the pace of change, I think certainly from a legal perspective, we're likely to see it give rise to an increasingly complex myriad set of legal and regulatory issues.
Yeah, because the AI now is much better than at the time this scam happened. Like, it has approved since then. It approves at an alarming rate. So it is a very scary scenario.
Yeah, I totally agree with both of you. I think it's compounded by the sort of societal movement over the last however many years around kind of moving away from real interactions and going on to Teams, messaging. All of that just creates really, really strong fertile ground for these types of scams to take place when you're not having those face-to-face conversations, etc. And it's a real challenge because this stuff is so easily accessible now. It's going to get better and better. I was going to say every year. It's not even going to take every year. It's every few months this will get better. It's just so scalable as well. And to your point, Marit, how much content is there of you, images, voice, video recordings that is so easily used and could be manipulated?
Yeah, I'm thinking it's better for those who just never put anything online going forward, because it will be harder to create a deepfake, maybe. But this is like one story that we heard. So it's not like it comes out a story every day about a similar scam on with a similar amount. Was this like a one-off, or do you guys think this happened much more than gets out there in the general public?
I mean, this is probably a rather exceptional case in terms of the particular facts and the size of the loss. But I think the typology, is going to become increasingly prevalent and common, particularly in the financial services sector. One point I thought was really interesting about this story, Marit, is that the employee had developed suspicions before engaging in the transaction. So I think the employee had received an email from the compliance officer instructing them to make this transfer, and they thought that was a phishing email, but nevertheless went ahead with the transfer after attending the team call with the deep fake fraudsters. Now, that's really interesting, isn't it? Because I think some training there and an awareness of the red flags might have helped stop this happening in the first place, and appreciate, it's not easy to identify red flags where you're looking at talking to a deep fake image with real life audio. But I'm not sure, Jez, what you think about that, just in terms of the training around this is going to be quite a key control, I expect.
I totally agree. Really, really good point. Again, it sort of goes back to similar to the APP fraud, right? Education is the best defense here. I think the way that these things have evolved, you look back, we used to get phishing scams via email. Typically, there'd be spelling mistakes in there. It was quite obvious it wasn't right. I think the bar for vigilance on this is so much higher. And interestingly, you pointed out correctly, he always had this gut feel and just didn't trust the gut, or there was a barrier that was then eroded by the technology itself, to sort of creating this false sense of security. I think we are, unfortunately, Marit, to your world of infinite trust, we are going to have to become a little bit more cynical, a little bit more vigilant around how we react to scams like this, or identify these red flags. And training is absolutely key on this. I think the other thing, the flip side, is we need to be accepting in the workplace that these things exist. And if someone is going through what feels like needless verification processes or procedures, they're doing it, for their own benefit and the benefit of the organization. But again, that just comes through collective understanding. It's going to be a real minefield. It's interesting. Maybe
like AI deepfakes is what will bring people back into the office and do more in-person meetings, because no one's going to trust digital meetings anymore.
Yeah, I really hope so. I do miss social interactions to the extent that we used to have them before. It could be the key.
So kind of like the same question as with the social media platforms, deepfake technology is now readily available across the internet. Is it time then to introduce some accountability to the technology providers if it's used in financial crime?
I think so much of it is open source now. It's sort of genie's out of the bottle on this one. We're not packing it back in, right? This is a difficult one in terms of the tech companies, because it's so sort of federated. It's quite easy to use those open source tools to develop this. So who do you go back to? Clearly, where there are specific tools developed by technology providers, etc., there's obviously things they can do, like watermarking technologies or whatever. But again, similar to fraudsters, it will be so easy to find a way around that. I think this is going to be much harder to pin on technology providers.
Yeah, I agree with Jess around the practical challenges there. I think there have been attempts from a legislative perspective to try and hold the tech firms to account for this type of activity. So Jess mentioned the Online Safety Act earlier that introduces new criminal offences around illegal content, for example. And there's a patchwork of existing laws around advertising laws, IP laws that we have here in this country, consumer protection laws. The framework is there, but it all comes down to appetite for enforcement. So are the authorities here, the authorities in the UK, going to take action against the tech firms and impose fines? That we'll just have to wait and see. But ultimately, I think that's what it will take.
Neil, you think there will be then a lot of new legislation forward that takes into account deepfakes and AI?
I think so. I think we've seen the start. We've seen the kind of first piece of legislation come through. But I expect that as the technology develops, there's going to have to be a corresponding development and raising the bar in terms of legislation and regulation that's in place as well, just to ensure that there are some controls in place.
It's time to finish this episode. I'm opening it up to our guests to share a financial crime story which they think truly mattered in 2024. That can be an emerging crime, new regulation, or successful attempt to combat it. So, Jesal, let's start with you. Can you give us a story you think really mattered this year?
Sure. For me, it's probably a bit cliche, but I think it's the Starling Bank fine. There are a few things about that were really interesting. I think for essentially a neobank, tech heavy, tech rich, the failings on some of that screening and compliance controls just seems strange because screening systems are so heavily based in technology. And I think you then also got this kind of behavior around not adhering to the regulatory requests for not opening high risk accounts. And I think what it signals, a couple of things here. I think where you're trying to implement in a cost efficient way, so neobanks are typically very lean, I think it just highlights the point of dangers of being too reliant on some automated systems. You need to have the right level of oversight over those, manual checks where necessary. And I think we're seeing traditional banks where the cost of compliance is obviously really high, moving to those types of systems. And I think it's just a warning shot to say, look, we need to be really careful about what we do here and make sure we still do things in the right way. And then the other thing here that was interesting was the speed at which the FCA acted here. The FCA resolved the case in 14 months, which is significantly faster than a typical case. Whether it signals a more aggressive stance towards non-compliance in the financial sector, who knows? But I think this is a warning shot that is really interesting, not just for neobanks, but also traditional banks that are looking to optimize cost and try and use technology to address some of the challenges that they have. Just doing it in the right way is so important.
Neil, what's your pick for a story that mattered this year?
So, Marit, I've chosen a story from right back in February this year, really from the policy side, where the director of the Serious Fraud Office made a speech and gave several media interviews pushing to pay whistleblowers. So this has brought the debate about whether to financially reward whistleblowers really back to the top of the agenda in the UK. If this goes ahead, if we make these changes, it could be a really significant change to the UK financial crime landscape. It could lead, obviously, to many more whistleblowers coming forward, and then the significant risk, increasing the risk of detection of misconduct for firms. The background to this is that for a long time, the UK has watched the US introduce various whistleblowing incentive programs. That's led to some eye-watering payouts. One whistleblower in the US received $279 million last year. Has been widely reported. But the UK in the past has been very reluctant to do this, but there is growing evidence that this would be beneficial. So it would reward individuals for the stress, the loss of earnings, the reputational damage that they suffer from blowing the whistle. The evidence suggests that there'd be more whistleblowing disclosures and better quality reporting. And the backdrop here is that there's been quite widespread dissatisfaction with whistleblowers' experience of reporting to authorities in the UK. They're not confident that disclosures are being dealt with properly, and more whistleblowers are bringing claims in the employment tribunal for alleged detriment they've suffered from blowing the whistle. So it's going to be really, really interesting to see what happens here. I think there's definitely a groundswell of support building for this, politically and publicly. And I think looking ahead to 2025, it's definitely an area to keep an eye on.
We had the whistleblower in the Wirecard case on the show,
Yes.
Pav Gill. So he has a lot of thoughts on this matter. So for anyone interested, I recommend go check out that episode in the back catalog. As for me, my honorary mention would go to, it's not like one story per se, but it's more like a topic. And the thing is that this particular topic is something that was brought to my agenda earlier this year, and now it's being written about all over the place. And I don't think people know how severe it is, and that is VAT refund across the EU. They don't know how much money goes out in fake VAT refunds, but it's estimated that it's something like 60 billion euros or something that goes out in fake VAT refunds every year. And I heard a story from Sweden earlier this year where they actually were able to make a conviction in a case, and that was 30 million euros just across 2 iPhone refurbishment shops in Sweden alone. They weren't able to catch the ones behind it, but at least they were able to make a conviction. 0 money recovered. And suddenly in Norway as well, like we've been doing this podcast now 3 years in Jan. In that time, this has not been on the public's agenda up until quite recently. And now it's also estimated like at least 100 million euros each year is paid out in VAT refund in Norway alone, maybe even more. So I just think it's such an important topic because it's actually paid in taxpayer money that just goes right out to criminals. And we should do more to prevent this. I don't know if it's private-public collaboration to share more data with like the tax authorities and things like that, or if we just need a new harmonized ownership registry across the EU so it's harder for people to own and control companies across borders. I don't know, but it needs to change because we can't have a situation with 60 billion euros being paid out to criminals of taxpayer money each year. That brings this spin of the laundry to an end. Jesal and Neil, thank you so much for joining me. Where can people find and connect with you?
I'll go first. So you can find me on LinkedIn, Jesal Punjani. You can also go to plenitudeconsulting.com. You can contact us on that page or also go onto the Plenitude Consulting LinkedIn page. And there will be someone very happy to help you get in touch with us there.
Neil?
Yes, thanks very much, Marit. Neil Donovan, you can find me on the Ashurst website, on LinkedIn. And we're located in Spitalfields Market in London. So do please get in touch if you're passing by.
Money makes the world go round.
And thank you for listening. If you've enjoyed this episode, check out the back catalog and follow The Laundry on your podcast platform of choice. We'd also love for you to share the podcast on your social media channels, tell your colleagues about it, drop an episode in a group chat. It really helps people to find us. Got a story you think we should be talking about? You can comment on the Strise LinkedIn page, my LinkedIn page, or email laundry@strise.ai. Your host for this episode was me, Marit. Our producer was Matthew. Our engineers were Dominic and Nicholas. The Laundry is proudly produced by Strise, the AML automation cloud. Visit strise.ai for more information. See you next year!
Yeah, money make a world go round. Ho, ho, ho!
The Laundry is proudly produced by Strise, the AML automation cloud.